to episode 1 of whatever I'm thinking about now. So, right now, I'm thinking about how life insurance, permanent life insurance, is a pretty good way to do a lot of things. Especially with, the bond prices going up and, the insurance industry being strengthened by this kind of a upward movement on interest rates, and also the kind of, I guess you could call it, hopefully shift of risk appetite for investors and for people in general. I feel like the fixed index universal life, and whole life space will get a little bit more attention. And currently I have one IUL on my own life, and I'm looking to potentially get another IUL on my own life. And maybe a whole life policy. It just depends. But I think that these policies are very, very diversified. No, not diversified. The word I'm looking for is flexible and useful. I think dynamic was where I was going, but not really dynamic. What I mean by that is these policies can be utilized very much so like a retirement account because of their tax deferred treatment of the internal cash value, but also do not have the rules that an IRA has. I myself being 38 this year, 38, I still have 21 and a half more years, 22 years probably, before I can take money out of an IRA without any kind of tax ramifications. And that sucks. I'll tell you what, that sucks. I would like to use some of the retirement account money I have, but I will not because of the penalty that is associated with me withdrawing those funds. So, shucks. Now one could say, yeah, well, that's good. Don't take it out. But if you could use them for a specific, like a business purpose, rather than taking out a business loan, it's a good deal, right? Especially if the 40, or not the 401k, but the what I'm looking for, life insurance will allow you to loan out your money at 1 or 2%, right? Your own money in there, you take a loan out of it. That way, you're not taking out, not touching the cash value. You're not disturbing that cash value. You're not disturbing its growth, and that also helps out a lot with kind of the process of your cash value growing, and also you can just simply pay it back, which is the intent if you're going to take out a loan anyway, right? A loan at the bank, you pay it back. So it does provide you with a lot of choices. Now some of you might think, well, Matt, of course you think you sell this stuff. And hopefully for those of you who are watching this channel also sell this stuff. You're also an insurance producer. But for me and for life insurance, it's always been quite a battle. I am a trader, stock trader, equities, options, futures, and I love trading. I don't know why. It's how my brain works. I just enjoy it. Anyway, that's kind of why I really don't like fixed index annuities or index universal life or whole life, because I'm a trader. I make 5% in a day, right? But not all the money that you have should go towards super risky stuff like me. For example, what did I do today? Today I made money, but I botched an oil trade. So I don't know how many of you folks know how to trade crude oil on the exchange, but I traded what's called the small crude oil futures. I did a calendar spread because we're currently, of course, in it's not backwardation, but we are backwardation, but that's only what we use for the VIX. It's where the front month is way more expensive than the back month contract on the futures. Spread's like almost $4, which is ridiculous. So I sold that spread. Unknowing to me, I did not know my account could actually sell the spread. I wanted to put it in to see what it would like if I could actually just put it in, because I've never tried to trade before. I put it in, I got filled, which means somebody took the opposite end of that trade. I literally was ready to call up my broker and be like, hang on, just get me out. I don't care what it is I have to pay, I'll send the check. Just get me out of this trade. Because I honestly didn't know what the heck I was doing. I don't normally trade calendar future spreads on the same equity, on the same underlying. It's not something that I normally do. And it costs, to put on the trade, it costs almost $3,000. So I thought, well, that's nuts, right? That's crazy. But that's the kind of world that I live in. That's the kind of world I enjoy. Rather, I did get a scare this morning, but that's definitely the kind of things that I do. So why would I put in my money into a product that, you know, that can get me 0 to 9.5%? That's foolish, right? On that one trade I made, I only came out with like $20, but it was a mistake, and I still made $20, right? Granted, I risked $3,000, but from a trading point of view, that's kind of what we do. We risk like 4 or 5 times the amount of capital we want to make, sometimes even more capital than we want to make. But I mean, we don't risk it, we utilize it. It's not like we have $500 up for, well, I mean, I guess if the thing went to 0, we'd lose it all. But I mean, we have our stops and things in. Well, at least I do. I don't know. I don't trade 100% of my assets on the table. But that's kind of what I do. So why would I stoop to putting my money in something that's 0 to 10? Let alone I gotta pay for the thing, right? So that 0 is already lower because I have to pay for the insurance. Then I thought, wait a minute. Back to what we're talking about, the loan and all that stuff. I would never, ever trade with money that I'm loaning, or that that I took out of the bank as a loan in the stock market. I don't do that. So then why would I even compare this IUL to my trading account? So now I think, wow, that's true. I should actually make those policies for myself. Why shouldn't I? It makes so much sense now that I can see it that way, that I would sell myself this policy that can be used for things like that. So now that's what I'm gonna do. That's kind of what's on my mind now. I'm looking at some policies to potentially do once I get this year's taxes squared away. That's kind of what I'm looking at right now. I think it'll be good, especially with the market down so much. It seems like, you know, it's a good time to just dip my toes in the water there and try it out. Not sure what it'll do for performance-wise, but I mean, the cash value buildup in there, as long as I'm not too reckless, should be reasonable. And, you know, to be honest, it's going to be used for probably in 10, 20 years, you know, before I can take out my retirement account money and before my Social Security sets in. And also, one thing that I've always thought about is when you have, well, I mean, granted the ACA could go away, but ACA looks at income, healthcare.gov, right? Income. I do health insurance as my main job. Income. And if I don't work, but I generate a whole ton of income by means of my retirement account, then I won't qualify for subsidies. But if I loan out money from my life insurance policy, for more income until I become age enough for Medicare, then, and only then, will I be able to get, money from my retirement account, and I'll have Medicare to use as my insurance, and not have to buy incredibly overpriced healthcare.gov money. Healthcare.gov, health insurance. Because most people who buy health insurance from the marketplace, the healthcare.gov, the ACA, they do not pay full price. And if they did, they would be in pain, because that stuff's really expensive. It is. It's very expensive. If you were 60 to 65 or 64 buying insurance from the marketplace, you're looking at $1,500 a month for the bare basic bronze plan, and that's not even insurance. You're paying $18,000 a year, and then another like $10,000 a year for care. It's $28,000. That's a lot of money. I don't care who you are. It's $28,000 is a lot of money. I know health is important and everything, but still, health is a lot of money. So I'm thinking that's gonna be something I'm gonna do. I'm probably gonna try and see if I can either convert one of my policies and then buy another one as my way of putting more money, or getting more exposure to IUL policies, and it being part of my overall wealth accumulation. But that's what I'm thinking about now. That was episode 1 about what I'm thinking about right now. See you guys later.